All right, looks like a fairly soft day on markets around the Asia Pacific. Let's take a closer look at how things are going. Avril Hong's in Singapore. Avril.
Yeah, Paul, we're seeing those tech stocks in focus, right? Getting hit for a second day. Those chip stocks getting beaten up by those concerns about tighter U.S. curbs and restrictions on not just China, but its allies. So the likes of Tokyo Electron, TSMC, among the biggest drags on the Asia stock gauge today. And perhaps unsurprising, given how some of them were already in overbought conditions, just needed this catalyst to prompt a bit of a correction. We are also digesting those comments from Trump, right? Pretty pointed remarks that came through in that interview on the yuan and the yen. Makes you wonder how this shifts the calculus for the likes of the BOJ potentially. We're seeing that rally yesterday taking a bit of a breather on the Japanese yen now, Paul.
All right, Avril, please stay with us as we're going to unpack some of those remarks we just heard from JD Vance on China with our guest, UBS Wealth Management, APAC, FX and macro strategist, Tek Leng Tang. Tek, thanks for joining us. I'm not sure how much of JD Vance's speech you were able to catch there, but he had some fairly strong remarks on China, particularly saying that we will stop the Chinese Communist Party from building their middle class on the backs of America's middle class. And this follows up on some of his other rhetoric this week about China being the greatest threat to the United States. So with that in mind, what's your outlook for the currency pairing between the US and the yuan? Should we see a second Trump presidency?
Yeah, thanks, Paul. So I think what came from Vice President-elect Vance is that the language on China is really getting quite worrisome because he's an extension of what Trump is about, which is very, very harsh tariff on China, potentially 60% to 100%. So I think just on the currency itself, it is getting very worrisome. I would say that at the same time where Chinese data is also very disappointing as well, we don't actually see much relief for the currency, even if the dollar were to weaken in the near term, given that we are getting US data on the softer side. But I think there is going to be a limit to how much the dollar yuan can decline. And I think as we head closer to the election itself, I would really be looking for upside risk. 60% tariff sounds like a huge number. I don't think that the reality would be close to that, but I think investors would have to start thinking about levels that is above 7.4. That has been the line in the sand, but that could be easily redrawn in my perspective.
Aside from tariffs, though, with Trump saying he wants to target the yuan, what is that realistically going to look like, though? Because there are two sides to this dollar-renminbi trade.
Yeah, so I think it is definitely not coherent what Trump is trying to achieve, which is trying to get China to strengthen the currency and at the same time threatening very punitive tariff. But what I would say is that as the president himself, the easiest part to have total control of is foreign policy. And that comes to the decision on trade tariffs. So I do think trade tariff would be the easier approach as opposed to trying to get the Chinese authorities to strengthen their currency. So I think just in terms of a sequencing-wise, tariff will still come first. And if tariff comes first, then the currency will first take the pressure before we get to an eventual deal, so to speak, and then the currency will to recover at a subsequent basis.
From now till November, though, a lot of this might just be rhetoric. Until we get further clarity, how do you think the PBOC is going to tread in terms of, say, the yuan fixed signals?
Yeah, so I think we are in a tug of war between weaker US data and stronger rhetoric by Trump. At the same time, Chinese data doesn't look like it's providing any help as well. So I think it really keeps the dollar-CNY balance in a very tight range. I would say 720 to 730. But as we get closer to the election, I can imagine this tight range starting to drift a bit higher, simply because the markets would actually be incrementally putting on hedges on top side for the dollar Chinese yuan. So I think by the time late into the year, we could get to above 730. Once we get the US election outcome, then it is all for that. Yeah.
Well, we have the plenum wrapping up in China today as well. We're expecting the communique shortly. Do you think there's going to be any policies in there that will support a stronger yen and support Chinese manufacturing and exporting?
Yeah, I think it comes at an opportune time because the committee itself probably would also have been looking at the recent disappointment in the Chinese data. So I would believe that they would be inclined to announce a little bit more of a positive tone with regards to the official communique that is going to be released. But I think at the same time, it is difficult to instill enough confidence in the markets, given that the election is really the elephant in the room. So I think even if they were to try hard to announce something very supportive, it might actually still not impress the markets. And what is left on the Chinese yuan will still be very tepid trading.
The other elephant in the room is what's happening with the Japanese currency. Do you think these comments from Trump actually change the calculus for the BOJ? Where do you see it going from here?
Yeah, so I think Trump did provide a helping hand for the Ministry of Finance, right? In the sense that they were trying so hard to defend 160. Now that they got an additional help from Trump pushing it down to about 155, it does open up space for them. But the irony is that it also makes them a bit less urgent to tighten policy. So for example, as we approach the end of July Bank of Japan meeting, they might actually feel a lot more comfortable and maybe just do a small step instead of a bigger step. So I think the problem is that is it time to actually catch the falling knife on the dollar yen? I would be a little bit cautious because we know that there is a very large amount of net yen short sitting in the market. But if it does get to levels close to 150, I would think that the market would again come in with strong buying interest.
But it sounds like there's going to be even more vol. How do you think that's affecting its position as carry?
Yeah. So I think not to forget that the fundamental driver for the dollar yen, if we were to see a persistent and sustainable downtrend, it has to come with a Fed cutting cycle. Now, what the market is priced for the Fed looks pretty reasonable. 2 cuts this year, about 5 cuts next year. But the complication is if Trump wins, we might have to reassess how fast the Fed can cut next year, right? So I think before we get the clarity of the US election outcome, the market will still be of the view that the Fed at best cuts at a measured pace. And that's where 150 to 152, there would be sufficient buying interest because they don't think the yield differential is going to narrow that quickly.
At the end of the day, that's what it's all about, right? Take, thanks very much for weighing in. Great chatting with you. Take Ling Tan of UBS Wealth Management. Back to you, Paul.
All right, thanks very much, Avril. Let's get back now to Milwaukee with Bloomberg Balance of Power co-anchor Kayleigh Lyons, who's been there watching the J.D. Vance speech tonight. Kayleigh, the Biden campaign has responded to that Vance speech. What do they have to say?
Well, what Joe Biden has said consistently since vice presidential nominee J.D. Vance became the vice presidential nominee is that essentially he is just a different version of Donald Trump, that their policies are very similar. And that is a message we are likely to hear the campaign continuing to push hard on. And for many people, that does ring true in that J.D. Vance is very much a populist like Donald Trump. He is just obviously a younger version, in fact, half his age at 39 years old. And you heard a lot of those populist tones in J.D. Vance's speech tonight as he talked about not being for Wall Street or big business, but for the working man, and specifically pointing to the working people of Michigan, Wisconsin, Pennsylvania, these key swing states, the blue wall and Rust Belt states in which J.D. Vance's appeal may be the greatest. At least that is the thinking of Republicans that I've spoken with here in Milwaukee in recent days since we learned officially that he was going to be Trump's pick.
So we've got a battle of competing narratives going on, really. I mean, we've got J.D. Vance saying he's not going to forget where he came from. And interestingly, he was played off to the theme music from Bill Clinton's acceptance of the Democratic nomination 32 years ago. So trying to cut into Democratic ground there. But then, as you say, the Democrats trying to paint him as this choice of Silicon Valley and billionaire backers. And then J.D. Vance saying that Biden's a career politician who's forgotten the unionized workers. So really, is there anything here to swing the mind of undecided voters, or are both sides pretty much rusted on right now?
Well, it's going to take time for us to tell that exactly how this bears out in polling now that we know that vice presidential nominee J.D. Vance is that this is a Trump-Vance ticket that voters will have to decide on in November. We'll see if they do have indeed more resonance. Of course, it's worth pointing out that going into the RNC, we were already starting to see President Biden losing ground in polls after his poor debate performance last month and growing calls within his party to actually drop out of the race. We got more of those today, including from a high-profile Democrat Congressman Adam Schiff, who does not believe, he says, that Joe Biden can beat Donald Trump. So that's the other interesting thing to consider here. We heard J.D. Vance in this speech tonight specifically calling out Joe Biden on multiple occasions, not just for the fact that he has been in Washington for longer than J.D. Vance has been alive, but also for the kind of policies that he has advocated for, including during Biden's days as vice president during the Obama administration. So J.D. Vance was still on the attack against Joe Biden. And the question is going to be, how does the Republican Party and the rhetoric of the Trump-Vance campaign specifically have to shift if indeed we do see some movement and Joe Biden potentially not becoming the Democratic nominee, although of course the president maintains that he still has every intention to stay in his fight for re-election.
Yeah, well, look, that was certainly a rousing speech and it was really well received by the room. So based on that, you'd say the momentum pretty firmly with the Republican Party at the moment. And then you look on the other side and we've got Joe Biden taking a step back because he's tested positive for COVID. What's going on in the Democrat camp?
Well, Republicans here in Milwaukee have been all about unity this week, and in part that is due to the aftermath of the attempted assassination of Donald Trump in Pennsylvania this past weekend. So a lot of the speakers have been focusing on unity. We also understand that Donald Trump himself has rewritten the speech he will give tomorrow night when he accepts the nomination to focus more on a message of unity. That said, the Democratic Party is not looking very united at the moment, as you now have upwards of some 20 sitting Democratic lawmakers who have publicly called for Joe Biden to step aside because of his age, because of questions around acuity and doubts as to whether or not he can actually win a second time against Donald Trump. Layer on top of that the positive COVID-19 test for the president earlier today that led him to cancel an appearance at an event in Las Vegas, now going to isolation in Delaware. It's getting more and more difficult for the Biden campaign. And of course, there have been reports by other outlets that senior lawmakers in Congress, Senate Majority Leader Chuck Schumer and House Speaker Emerita Nancy Pelosi have expressed to Biden some doubts about his ability to beat Donald Trump. And so it does feel in some ways that there is momentum growing for Joe Biden to get out of the race. And we'll have to see if there actually is any movement, as the Republican convention here in Milwaukee has been taking up a lot of oxygen.
You know, that COVID diagnosis is interesting timing because it was just today also that he told Bet News he'd consider dropping out if a medical condition emerged. Yeah. Does a positive COVID diagnosis qualify?
Well, I guess that is a question that only President Biden can answer, because you're exactly right. In that interview with BET that he sat down for earlier this week, when pushed on what would cause him to drop out of the race, he said if a doctor told him he had a medical condition that required as such. That is a shift in language, though, for President Biden, because, of course, if you remember in the immediate aftermath of the debate, when he sat down for an interview with ABC's George Stephanopoulos, he said only the Lord Almighty coming down and telling him to drop out of the race would force him to do so. So it does seem like he himself is shifting the narrative a bit. But yeah, it's quite a coincidence that after he says that, he comes down with COVID-19. Of course, the White House doctor, in putting out a statement announcing that positive test, did say he's only experiencing mild symptoms, although as part of those symptoms, he did say he's experiencing general malaise. And for a president who is fighting very hard to shuck off concerns around his age, acuity, and ability to continue on in this office, malaise isn't necessarily something that is likely to help assuage the fears within his party or within the American voter base.
All right, Balance of Power co-anchor Kayleigh Lyons in Milwaukee at the Republican National Convention. Still to come, we're going to speak exclusively with the CEO of Invest India, which is the country's investment promotion agency, and hear how they plan on luring more global investments next. This is Bloomberg. All right. Welcome back. Let's take a look at how the Indian markets are doing just a few seconds after the open. And we're seeing a modest risk-off tone right now. The Sensex off by 0.25%, the Nifty 100 off by a similar amount. It's really echoing the theme that we're seeing across the Asia-Pacific at the moment. Broadly, it's a risk-on tone across the region. All right, let's bring in Nivruti Raina, CEO and Managing Director of Invest India, which is the government's investment promotion agency. Nivruti, thanks so much for joining us. I just want you to firstly explain to us how successful you feel the Modi government's incentive schemes have been at attracting investment to India, perhaps at the expense of China.
Sure. So, Indian government has been doing a lot of things where we are looking at how do we provide incentives to address, certain deficits that India has in terms of, the ability to import things that, currently we don't have the suppliers of. So we have, very structured way of providing incentives, for example. And I can tell you some of the incentives that I have seen have increased the exports to the order of 30 to 40%. And we'll continue to look at, what are some of the additional areas and components, subcomponents in electronic space that we can continue to provide. We're also looking at many ways of attracting, R&D experts, looking at growing more of our patent filings. And our goal is, over the last 7 years, we saw 70 billion on an average FDI coming into India. Our goal for the next 7 years is to draw on an average 110 billion per year, which amounts to roughly $1 trillion plus over the next 10 years. And that's the goal that we are driving, which means we have to work towards growing, at a rate higher than 10%. And to do that, we are doing many things, focus sectors, partnership, all that we can, in addition to the stability that the government is working on.
Well, of course, one high-profile investor that was meant to be setting up shop in India was Tesla, but they've since vanished without a trace. Do you have any concern about the message that sends to other foreign companies that might have been looking to invest in India?
I'm not concerned. Investment is a cycle. There are up times, there are down times. If, one investor goes, doesn't mean others are not. We have Micron, we have Tata with partnership with PSMC. So, there are many things we are doing. Our own automotive industry in terms of export is doing really, really well. So I'm not concerned. Market to me is a sinusoidal curve. It goes up, goes down. What we have to look at the trends. And the trends are giving us very positive message. I really don't see any country showing the growth rate that we are, 7 to 8%. 10 years ago, we were 9th largest economy. Today, we are 5th. Next 3 to 4 years, even if we take humble growth rates, we will become the 3rd largest. Having said that, I want to assure you we are fully aware of what are the changes that we need to make, what are the benefits that we need to provide, and we are working on all that. And in presence of all of that, I am really looking at focus sectors. I don't want to peanut butter myself across every single sector. I'm looking at what are the countries that I want to partner with, what are the focus sectors that we will work towards. And as a result, we have created something we call PM8, Priority Mandate 8. And there are 8 sectors that we are working on, which we believe is going to drive more focus and help us with greater than 10% growth.
Can you tell us a little bit more about some of the countries that you're looking to partner with? And you mentioned more reform is needed. What are you looking at there, particularly in terms of cutting red tape?
There are several countries. So if you look at some of the sectors that I highlighted, 8 sectors, I'm looking at what are the countries who are doing amazing in these sectors, who have the technology, who have the IP, partner with them, look at political friendship, look at democratic vision, and partner with these countries. So US definitely is a big, big partner to us in terms of technology. And in fact, there is something called Critical and Emerging Technologies Partnership, ICET, which India and US are working towards. We also have similar partnership with Quad. which is, US, Australia, Japan, and India. Similarly, we have IMEC, which is the Middle East, Europe, Israel corridor. So we are looking at all of these countries who are raising their hands for, larger good, democratic good, and are partnering with India. Nobody can ignore India at this point of time. And I really feel people have what is called fear of missing out in the young people's lingo, because few things. India is seeing 7% growth. India has 500 million workers or resources. India has demonstrated software as national level platforms and the ability to drive fintech revolution through those national level platforms. We are working on health. Similarly, the amount of investment government has made, about 1.3 trillion over the last 10 years in infrastructure, whether it is, air, whether it's road, whether it's rail. And I'm really even proud about the space. So some of these things nobody can ignore. And the last thing, which is very, very important to me, is the youth. India's median age is 28. So with all of these factors that I just talked about, India is seeing the velocity of 7%. What my team, and the government is looking at is, how do we get the acceleration? With the velocity, we are seeing 7% growth, 7, 8, people can argue. But what we are trying to do is, how do we accelerate? So the acceleration needs focus. The acceleration needs partnership. The acceleration needs, what is the deficit that we have? How can we address with partnership? And, so therefore, I'm looking at all levers to create this acceleration, which will take us to, perhaps doubling our economy by 2030. And one more thing I can tell you, I relocated from US in 2007. And 2007, I told myself, remember that Indian economy is 1 trillion. Before I knew it, Indian economy became, 2 trillion, somewhere around 2013. Yeah.
We're unfortunately running out of time, but thank you so much for joining us. Nivriti Rai, CEO and Managing Director of Invest India there, speaking to us exclusively. All right, let's take a look at how the Indian markets are tracking at the moment. We are, of course, watching a couple of tech stocks today. It is the middle of earnings season at the moment. We'll have Tata Communications coming up with numbers later. The estimated net income there, 2.4 billion Indian rupees. Got 4 buys, 2 sells, 2 holds on that stock. Down a little bit today, but shares are up about 15% on year. Infosys, another one we're watching. First quarter results due out today. We're expecting to see some ongoing strong revenue growth there. Infosys also expected to maintain revenue growth guidance. That's having a better day, up by about 0.5% right now. All right, we do have plenty more to come. Stay with us. This is Bloomberg. We will be watching for the ECB's latest rate decision. That's coming very soon, in a few hours, in fact. Economists expect the central bank to hold on cuts as the case for inflation returning to 2% faces growing skepticism. And you can stay with Bloomberg for live coverage of that decision and the news conference afterwards with President Christine Lagarde. Coming up at the times listed there on your screen. All right, let's take a look at how markets are tracking just as we leave you. A bit of an off day for Japanese stocks. A couple of things going on here. Of course, Asia chip makers have been selling off following that US pressure to give more severe curbs if chip makers keep giving China access. We've got a much stronger yen as well weighing on Japanese stocks. That is it for Bloomberg Markets Asia.